I'd like to point out the revision in paragraph 4 of the charter. When the committee charters were first drafted, the purpose of the charter was to spell out the role and responsibilities of the committee. This revision rounds out the charter and provides a complete picture of the working relationship between the committee and staff. It outlines the responsibilities of the staff to provide the committee with all of the relevant information regarding matters before the committee. It also requires the staff to provide all the information the committee needs to perform its monitoring and oversight function. Can I have a motion to approve the charter as revised?
Yes.
Motion made, second. All in favor? Aye. Any opposed? Carried. Okay, audit approach, plans, coordination with external auditors. That's
David Jones.
David. Why don't you just give us an overview of what you...
Actually, we're going to make the assumption that you had the opportunity to look at it to the extent that if you have any detailed questions, we'd be glad to talk about this. I want to do something that I've been resistant doing in the past, and that's introducing the engagement team to you. Glenn Friedrich, you know, and Glenn will be responsible for about everything. No, actually, he's going to be responsible for the tunnels and bridges, the FEMTAC, and the commuter rails, and then the pension plans. Bob Bruni, who's been here before, who's like myself, has spent a term and had rotated out, will be primarily responsible for the bus operations. We tried to design an audit team around your functions. Doesn't hardly fit, exactly, but for the most part, it's around your operations. I'm going to be responsible for the headquarters and for the transit authority. And then we have Darshan Patel, who is a senior manager, who is, is basically our senior staff person, but he's going to be directly, in addition to kind of managing the administrative aspects of all the things that we do here, he's responsible for the audits of the federal financial assistance programs and the bus operations. We have Jill Przynski, who is an audit manager. She's been on the account for 5 years now. She started as a brand new staff person in the firm on the account, and she's basically responsible for those things that she kind of follows Glenn. Not totally, but almost. And then you have Jen Mishner, who is a new audit manager. She's been involved with the authority too, but not to the same extent that Jill has been, but for several years. And she'll be responsible for bus operations and the transit authority. And then we have a whole host of staff that works under these guys. But I thought it would be good for you to see the people that really do the work. As it relates to our audit plan, the thing I'd really like to focus you on, we are changing our approach to the audit a bit. Some of it's because now, since you have one auditor, it's a little easier for us to focus more on the risks, the total risk to the organization than it has been in the past. But basically, our process starts with a good bit of planning. And the good bit of planning includes having a lot of conversations with management throughout the years about new types of activities, new types of transactions, or transactions that has occurred during the year, or changes in processes. And then we go through a real detailed, now we have it on pages 4 through 13. We give you some, at a pretty high level, some of the things that we look at from the standpoint of view of risk. And now when we talk about risk in our audit plan, we're talking about risks that amounts that are recorded in the financial statements will be misstated, not business risks. Now, some of that will find its way into financial statements, and to the extent that it does, that's included in this process. But for the most part, we're looking at risks that amounts could be reported in the financial statements and not be detected. There are a couple of things that I want to refer you to. Now, some of them relate, basically a lot of these risks relate to the amounts, just the size of the amounts in the financial statements, but more, they're related to our past experience, where we've seen that there, because of the processes, there is a greater chance that certain items that appear within the financial statements could be misstated, whether it's based on our past audit tests, past audit adjustments, or just our experience with the levels of controls. There are a few pervasive risks that we do look at. One is fraud. And as you are aware, several years ago, we had a change in the auditing standards which required us to specifically design tests to look for fraud, and primarily in the financial reporting process. Now, it's not intended to find all fraud, but it's intended to look for fraud that would be material to the financial statements. So as a part of this process, we actually sit around a room with, there's about 40 plus people, and talk about the types of fraud that could occur, and then we design specific tests that we won't disclose to you, but we design specific tests to look for those in those circumstances, to look for the types of fraud that we were talking about. There is also because of the nature of your organization, rarely do we look to weaken an economy. I mean, that's not a fair statement. The weakness in the economy is causing us to look at things a little harder, and that's actually how it is. Because while you are not a public company, the economy sometimes forces organizations like this one to paint a rosier picture than it might otherwise want to show. Certainly with your revenue streams, certainly with your the circumstances that you're facing yourself with looking at your operating deficits. We think that it's probably worthwhile to basically force people to look at the issues a little harder than they have, to specifically look for areas where there's judgment in the financial statements, and challenge those a little bit greater than we've seen in the past. For example, in accruing revenues, recognizing liabilities that are based upon some actuarial methods, the things that include a good bit of judgment, we'll actually spend a good bit of time with. You have a question?
I have a lot of questions, and I'll try to be brief and go through them quickly because some of them I think are probably a little petty. But I'm very glad to hear you say this, because I know we rely on, in the area of the weakening economy, we rely on statistics that the city uses and that the state uses, and I sometimes feel that maybe we don't do enough of our own tire kicking and make our own judgment calls with that data. And is that something that you're going to be?
Well, to the extent, some of those statistics, I know that some of the operating statistics that you're using that you use for, federal funding purposes, we actually do look at it very specifically. Now, it's not an audit, but it's agreed upon procedures. The things that I'm really talking about relate, I'll give you the best example, post-retirement benefits. Mm-hmm. If you look at that calculation for the liability related to post-retirement benefits, there's a lot of that information is not based upon historical financial information, but it's based upon the organization's past experience plus its prediction for the future. Mm-hmm. So it has a lot of judgments in there, and there's a lot of assumptions. Well, sometimes it's easier. Sometimes, and one of those assumptions, by the way, is what they refer to as, for the big one for post-retirement benefits, it's the cost of medical benefits in the future, because you have to basically assume what they're going to be in the future and discount it back. That is, by changing that assumption, 0.5% or 0.25% really has a dramatic impact on the calculation. Yeah. So in that circumstance, we'll really challenge those assumptions, or even the discount rate. So we will look at items like that. Certainly revenue accruals is a real issue. One of the things that we will look at, by the way, is everything that is what's referred to as a journal voucher here, but that is a a recording in the financial statements or in the general ledger that's not based upon a normal recurring type of transaction. But it's, for example, writing off assets or making one-time adjustments to accounts. We will look at each and every one of those.
Let me get my other questions out very, very quickly, if I could. When you talk about doing effectively some spot auditing of investments and investment compliance,
Right.
how many of the entries do you think you're likely to be testing or spot checking? You have a sense of that?
Well, can we talk offline?
Yeah.
Because those are
Okay.
things that we tend not to disclose a lot of what we have in here to management because we don't really want them to know what we're looking at.
Yeah, I don't want to know which
Right.
ones you're looking at, but I want to know that it's a goodly
But I'll tell you
number.
how many we do. We've got
Okay.
actually, I can say this. We have a statistical-based methodology
Okay.
that's based upon lots of things. But I'll tell you the exact number offline.
Also, will you be looking at all on debt compliance? Are you going to be looking at the leveraged lease transactions that we have outstanding?
Yes.
Any great? Okay.
Actually, we've spent a lot of time over those in the past. We will continue to spend a lot of time with those.
And when you say that you are going to look at the derivative transactions we'd entered into on the pay fixed, receive
Right.
floating, you're also going to be looking at the variable rate performance versus indices? Are you going to be
Yes.
spot checking that as
Yeah,
well?
one of the things that we will look at a bit this year, while it's not applicable for this year, there's a new accounting standard that deals with derivatives for government. It basically, there's a question of when you can account for something as a hedging activity versus not as a hedging activity. The assumption that the authorities made in the past with some of those financial derivatives, some of the derivative transactions, that they are hedging type activities. In the future, in order for the authority to be able to account for those as a hedge, i.e. that means they basically use settlement accounting. We recognize the transaction at the end when it trues up, unless there's a permanent impairment somewhere. In order to get that deferral accounting, the hedging activity or the instrument has to be what they call deemed as effective, and that means that the authority has to disclose the type of risk it's trying to hedge, and then there's a series of tests that the authority has to pass or that instrument has to pass in order for it to qualify as a hedging activity. We will look at those this year, just to kind of understand processes. Understanding the authority probably hasn't gone through all of that exercise yet.
Thank you.
Any other questions?
Yes. On the other part of the audit plan for each of the agencies, I just noticed that Long Island, Metro North, and Triborough, and I think MTA Bus has a section. Capital assets are going to be assessed, but transit didn't. I was just wondering if that was done earlier or is going to be done in the future.
The answer is it will be. It's so material to the financial statements. And again, by the way, this is not all-inclusive, nor was it intended to be all-inclusive of everything that we're in there. But just given the size of the capital assets at transit, answers yeah. Probably about a third of our audits around capital assets.
Oh, okay. It's just not listed in here. Okay.
David, just one quick question on the org charts.
Yes.
I noticed there isn't an engagement partner or director for the Transit Authority work.
That's me.
You're listed as lead client service provider.
But I'm going to
and
sign
then
the report.
You're going to sign the report. Okay, because you're everywhere on this chart. You're not just you're not just on headquarters at Transit.
Actually, we have a division of duties, and the two reports that I will sign will be the overall financial statements for the authority as a whole, and the transit authorities. The rest of them will be signed by the two guys
And is
with
there
me.
a difference between an engagement director and an engagement partner, or is it a title thing?
It's a title thing.
Okay. Thank you.
Any other questions? Dave, you got anything else for us?
No, other than we will. And by the way, there is one other thing. We are in the process, while the BSC is not material to our audit of these financial statements, we are in there looking at looking at the design of their processes now.
Okay, that's good. There are no other questions?
Thank you.
We thank you.
Thank you.
Next on our agenda is the information technology reports. And we'll have the Chief Information Officer and come up here and along with
Good afternoon, Mr. Chairman. I'm Wal Hebri. I'm the CIO for MTA headquarters, and I'm joined here by the agency CIOs who will also be able to answer any questions you may have. In your agenda package, you'll find the information systems and security controls report. It's an informational item prepared by us, the Chief Information Officers and Chief Technology Officers of MTA headquarters and the agencies. It has 3 elements. It's set through a framework that's prepared by MTA Audit. And the 3 elements are going over the security control recommendations that may have been presented to us by MTA Audit. It has actions we have taken to strengthen controls, system controls, as part of the normal course of running the IT operations in the agencies. And finally, it has key systems initiatives which are currently underway in the agencies, including disaster recovery, critical systems, new critical systems, and new information systems initiatives. I'd like to bring your attention to some highlights in this report, if I may. We continue to develop and maintain enterprise security policies that we all follow and abide by. This year, we've updated 3 policies to bring them up to par with new changes in risks and security requirements. We are also on schedule to ensure full compliance with New York State's revised cybersecurity policy, which requires encryption of electronic media that has information. All portable media had to be encrypted, and we're well on our way. Most agencies have encrypted their laptops and portable media, and the rest of the agencies will be completing that by second quarter 2010. Another major all-agency encryption initiative is our encryption of mainframe-produced tapes. We have 40,000 tapes right now that are mainframe tapes. All of the hardware for this has been installed, and the progress on that is moving according to schedule. We expect to be done in March 2010 with all of these tapes being encrypted on tapes that are of higher density, so we'll have fewer tapes. We also received a lot of help from MTA Audit, who reviewed our stock of tapes and gave us a recommendation to eliminate about 20% of them. So those will be destroyed in accordance with our own policies as well. The Enterprise Systems Development Group at headquarters is also working on 3 key enterprise systems. A new risk insurance safety and claim system will be an all-agency system for risk management. The 2 railroads will be the first 2 agencies to go live with the system in the period of second quarter 2010, followed by the rest of the MTA family. We're also in the final stages of completing a capital program dashboard, which will be posted on our website. We'll allow yourselves and the public to keep track of their projects and see how we're progressing against them in terms of scope, budget, and schedule. And finally, an operational dashboard as well will be slated to go live soon according to the timing of our senior management. We're also working closely at the CIO Council in forecasting our procurements 3 years in advance and trying to work together on consolidating our volume purchases. In February, if you remember, we went together with a wireless staff summary for cell phones, Blackberries, wireless modems, Wi-Fi modems, and we saved the MTA about 30% of the normal cost of what we were just paying before, which were negotiated prices. That's 30% on a $23 million expenditure that is 5 years, recurring 5 years. So we continue to do that. Obviously, we work with the BSC, the procurement review panel, to ensure that everything over $250,000 goes to the procurement panel as well, to make sure there's no more room for additional savings. And our agency CIOs who process a high volume of credit card transactions, the 2 railroads and New York City Transit, also work together on ensuring compliance with the payment card industry's security standards. so that we all learn from each other's experience and how to comply with that. And that's my highlights summary, but if you have any specific questions, I'd be happy to answer them.
Do we have any questions? I know I didn't read it all, but I went through it. It's a quite elaborate presentation, and we appreciate it. Thank you.
Thank you very much.
Okay, now I'd like a motion to go into executive session, please. Second? All in favor? Carried.